tell us all about?
Power of pull. Since I'm reading the book, I'll tape this and put it up on Webmaster School.
Very tethered here.
Says I have friends that might want to see
I
it.
too have no slides today, so I hope I don't disappoint anybody. I wanted to particularly talk about something that has been a consistent theme throughout the previous presentations, and that I think needs to be brought out and put front and center, which is the notion that if you take seriously what's been talked about in terms of social business, and look at where we are today in most of our companies, this is a huge transformation that we're talking about. This is not minor changes on the edge. This is huge fundamental transformation. And I think the really bad news, just to be the rain on the parade a bit here, is that the history of major transformational change, especially in large enterprises, is not a very good one. Basically, somewhere on the order of 3/4 of all major change initiatives fail. And so I wanted to really focus on 3 questions today that hopefully will provide a ray of hope. It's kind of a classic case of turning bad news into good news. But I wanted to look at, first of all, the question of, so why is this change going to happen? I mean, it's a huge change. It's really painful. Why is it going to happen? And then secondly, talk a bit about, so what kind of change are we really talking about? And certainly we've covered a lot of that today. I want to highlight one particular dimension that I don't think has gotten enough attention. And then, time permitting, a brief addressing of the question of how will the change happen? So let me start with the why will this change happen. And to do that, I wanted to really go back to some research work we did last year at the Center for the Edge and published in what we called the Shift Index. It's in the new book as well. But it was a first attempt to really develop an index that would look at the massive long-term changes that are transforming our business landscape. As opposed to most of the indices, we tend to look at everything from inflation rates to unemployment rates, really useful but very short-term in focus. They tell us how we're doing this quarter, maybe this year, but they don't have a lot of insight about longer-term change. What we did was develop this Shift Index. We had 25 metrics on it. One metric in particular drew the attention of most of the media and the executives we deal with, the clients we deal with. And it was a very simple proposition. We said, you know, at some point we ought to just look at bottom line performance for companies across a long period of time. And we picked return on assets as a reasonable measure of fundamental business performance. We looked at it for all public companies in the United States, not just a sample, but every single public company. And we looked at it over a long period of time. In fact, we started in 1965 and moved up to today. So what happened to return on assets for all public companies in the United States over this time period? Well, it basically has collapsed. Over that time period, return on assets has declined by 75%. And it's been a sustained and significant shift. There is no evidence of it leveling off, much less turning around. So there is no evidence, no reason to believe that as we come out of this economic recovery, and hope springs eternal, that the pressure is over. In fact, the pressure will continue to mount well beyond any cyclical events that are happening around us. Now, when I go into executive boardrooms, one of the metaphors that I hear very frequently these days is the Red Queen. It's the notion of running faster and faster and just staying in the same place. Well, if you take the research that we did seriously, the Red Queen is actually an optimistic view of the future. What we're doing is running faster and faster and falling farther and farther behind. Now, this is sounding pretty bleak, and I would say it is at one level quite bleak. In fact, the conclusion we draw from it is that the current management practices and business institutions that we deal with are fundamentally broken. You cannot, over this length of time period, have that kind of consistent erosion in performance and say things are working. So they're broken. That's bad news. On the other hand, it is good news, because the only way, if you look at the few major change initiatives that have succeeded in large enterprises, one of the key common elements is the notion of a clear and present danger. Vision-driven change largely fails. It is only when there is a threat immediately on the horizon that executives focus attention and are willing to question the most basic assumptions about their business and support sustained significant
changes fail.
That is what we are facing with this kind of performance trend, is a clear and present danger. And I will say also, that trend is not sustainable. So in a perverse way, again, that's good news. You cannot continue on this trend. Roughly by 2022, return on assets for all public companies reaches 0. Now, in a market economy, you will not be able to support business activity at that point in time. So something will change over the next decade or so. So that's the reason I believe this change will happen. It has to happen. It is an imperative. It is not a choice. It's not something that visionary business leaders could adopt if they so wished. Companies are going to have to change. Now, what's the nature of the change? We've had various snapshots of it.
I wish you'd give an example of what the asset going down was.
The particular frame that we use in this new book, Power of Pull, is the notion that what is driving, one of the things that's driving this erosion in performance is the source of economic value is fundamentally shifting. We lived in the 20th century in a world where economic value was in knowledge stocks. It had to do with developing some proprietary knowledge, protecting that knowledge as best you could for as long as you could, and extracting as efficiently as possible the value from that knowledge. And it worked. It created huge companies, very successful, profitable companies. The challenge is, as a result of a whole series of changes that are going on in our broader landscape, we believe the source of economic value is shifting from knowledge stocks to knowledge flows. It has to do with more effectively participating in a larger number of more diverse knowledge flows so that you're continually refreshing those knowledge stocks. Because your knowledge stocks are depreciating at an accelerating rate. So if you're not in the flow, refreshing that knowledge stock in a very rapid way, you're out of business.
Really?
Now, when I talk about knowledge flows, I get lots of different interpretations. When I'm in Silicon Valley, where I'm from, the geeks in the crowd immediately will talk about databases and the flows of numbers and data through cyberspace. That's an important part of knowledge flow.